That was a perfectly timed noise in the background. All right, you guys got to know this is first of all, this is deep dive with Daniel. Daniel also happens to be in an Asian country, way over there,
Featuring roosters.
that has roosters and cats that love to roam and make noise. The roosters make the noise because it's early morning for him there, so the alarm clocks are going off everywhere. Nature's alarms. There you go, just like that.
No
And
snooze
then
button on those guys.
and then the cats are wandering because it's getting near their nap time. They stay up all night, right? And then they have morning naps. So
Hmm.
he already tried earlier. We were recording something else, and the cat tried, I think, get in his lap and go to sleep, but he got rejected. So anyway, throughout this, if you hear that alarm clock go off, that's what it is an actual rooster. It's not an alarm clock that has the sound of a rooster. These are the real ones. All right, so we'll move on. The Philippine Farms. We'll just say Philippine Farms. You're coming. There he goes again. From Philippine Farms, it's Daniel, and this is his deep dive. We're talking about
Live.
yes, we're not taking any tours though. This is the Buffett indicator, and the question that you had in this. First of all, we're going to talk about what the Buffett indicator is, and then ask the question: is the market heading for a crash based off of where that indicator sits right now? So, give us a little bit of indicator, what the indicator is, and what we're going to talk about, Daniel.
Yeah, so the Buffett indicator is something that he's been using for a while to determine kind of like if markets are overvalued or not. So what he does is he takes the market cap of all publicly traded US stocks divided by US GDP, and that gives you a percentage number called the Buffett indicator. So just
Pretty
as
simple.
little reference point is for the dot-com bubble before the tech stock crash, the indicator had hit 138%, right? So, we're pretty
Sounds
much looking
crazy.
for anything over 100. And in
Hmm.
2008, it hit a high of 105%. So, Darren, what
Also
do you
sounds
think it
bad.
is now?
It's obviously going to be higher than those two numbers, I would think, or else you wouldn't be bringing it up. So, where is
Oh
it
yeah,
nowadays?
it is. It is double where we've seen crashes before. So we're sitting at a nice, pretty 203 at the time I
Wow.
wrote the article.
Almost double the great financial crisis. And that's why we
Hmm.
keep hearing well, no, we don't hear it enough because people don't want to say it because you can't say it. Just like you can't say Fight Club. You can't say Buffett indicator is at blank blank on business TV. So because that part of the whole thing with the banking system is everybody has to believe in it, right? That's the reason that's the only way it stays that way. And when people start don't believing in it, that's when we have the problem. So it's little things, bits and pieces are creeping out here and there. And so the latest and greatest is the Buffett indicator at absolute all-time highs of 203%. That's nuts.
Mhm.
We've talked about it. You and I have, and also in After the Bell about things being swept on the rug. Things that we'll take care of it later, and we feel that there's just this huge. We can say Buffett bubble now. Hey, can I coin that? Can I trademark that? The Buffett bubble. All right. Ooh, that makes me think of a Buffett has a bubble butt. Never mind. Anyway, let's go on. That's crazy. All right. So, why in the world? Because you mentioned it. Why is the Buffett bubble um, where it is now at 203? Do you think?
Yeah, so there are a few things. So, we were actually just talking about this and After the Bell that, whether it is a new normal or a bubble, that tech and AI valuations have gotten pretty crazy over the last 2 years, right? So we have seen a big inflation in the stock market due to, AI focused investing. There's also because of kind of, I'll lump these two things together, but the post pandemic recovery, there was
Mhm.
years of low interest rates, right? Easy to borrow money. And then quantitative easing, AKA printing of money, which, when, because the way it works is that rich people get the money. And when rich people get the money, they put it in the stock market. So it just raises valuations as they are. There's that. And then we've also seen some slow GDP growth, not negative, right? although there was a period where we did have negative GDP growth, but it wasn't technically a recession because we changed the rules. We still haven't seen, only about a 2% growth where normally we would want to see something like 3 to 4%. So,
Hey,
a
Daniel,
combination. Yeah.
is just real quick, is the GDP a survey as well?
No, it's an actual number taken from US
Made
exports, right? Or in like,
I don't know. Anyway, I just feel like, just as I don't trust anything that the government puts out in numbers wise, that is, I don't trust the number they
I
put
mean,
out in GDP either.
GDP doesn't get revised though, does it?
Uh, don't know, but I do know that I just feel that all these different countries can basically pop out a number without ever being audited because who's going to audit the numbers and say that the GDP is actually the GDP? That's all I'm going to say with that.
Let's ask
Um,
Chat GPT.
we're
See what
doing
it
it an
says.
aside here. Now we're trusting AI. It's going to say the right thing.
Well, when you're doing it on the fly, you got to start somewhere.
Is it
So
referencing DeepSeek's AI or?
I doubt ChatGPT will do that. Let's see, GDP is not a survey,
Hmm.
but it does use surveys as one of its inputs.
Yes, I did know that
And
somehow a survey was involved.
GDP gets revised multiple times after its initial release.
Exactly. Okay. All right.
It's because
All
it's
right.
based on incomplete estimated data at first.
Yes, estimated, seasonal, all that crap that they throw in. All right. Anyway, that's an
So
aside.
all
Sorry to
all
we
Darren's
went off.
saying is that the number might be actually worse than what this indicator reads.
Pretty much like I've said for a couple of years now. All right, go ahead. Sorry to get in there, but it's just that when you said GDP and we're talking about GDP, it's just like, oh, that reminds me of the employment numbers, everything else we get that just seems to be just a random number. That means absolutely nothing. All right, so you were
No,
talking
no,
about the GDP growth is a problem, and then the post pandemic recovery. I think you mentioned that as well as what is used for the Buffett indicator, right?
well, those are reasons why the Buffett indicator is sitting where it is.
Right. And we didn't even talk about the doomsday clock, which maybe there's a correlation between that. If the Buffett bubble indicator goes over 200, then that's automatically going to mean that you're getting a lot closer to the apocalypse. All right, so we're going to throw out something else. Uh, if you want to look at it, we're not going to talk about it today, but look at the doomsday clock. A bunch of scientists come together and take a bunch of different things into consideration, and that's how close we are to the end of the world. All right, so let's move on. We're talking about Buffett here, though, not the end of the world. Um, so he has a history. He has a history of being right. Is that what you've said here?
Yeah, so I mean, it's just that more of when the Buffett indicator has gone above 100, there has always been some kind of crash or correction, right? Even when I think it just nicked 100 in like, is it the December of like 2017 or 2018, right? We had like a quick
Mm.
10% correction. And,
Mhm.
I'll kind of jump into what the next part of the article is, but I think this is important to factor in because if you look at Warren Buffett's positioning right now, he owns
Mhm.
more short-term treasuries than the Federal Reserve, right? Which is like absolutely like he owns the most short-term treasuries,
He is a
which
government himself.
just to read between the lines for the people is that he is essentially saying in the short term there's a significantly higher risk in owning any new stock venture whatever than it is to just sit in short-term treasuries and get that 4.5% yield or whatever he might be getting. It depends when you bought them, right? So when I think look at the Buffett indicator, you look at his kind of positioning right now, and then you also look at things like the yield curve is like reinverted, within the last few months, and what the correlation of that normally is. It starts to make you think of like, oh,
Right.
maybe things are, I'm not calling for recession or anything, but like maybe some kind of at least correction is coming up or slowed growth period, right? Some reversion to the mean situation.
Well, I think now we have the cats. All right,
Now,
nice.
yep, now the cat's meowing,
Where's my food? Feed that
right?
thing. Come on. But no, I mean, can we come up with the Ken Griffin indicator too? Because I mean, he's been shorting treasuries for how long? Citadel. So it'd be like we need to get Buffett and uh, Griffin in a like a match, a boxing match or something.
In a
I guess
WhatsApp group.
they're taking up. Yeah, that's right. Sponsored by WhatsApp. All right, so um, but because that's what he's doing now, right? Is he at first he was all into cash, and I guess he went into treasury. Is that considered cash when you say I'm into treasuries? That means I'm into cash, or
I
is
mean, pretty
like
much
on the
because you can
sideline?
convert them pretty easily. Yeah, it's definitely sitting on the sidelines. You can convert it pretty easily into cash. That being said, the amount of treasuries he owns, I don't know how liquid that amount is. Like when you own more than the Fed, right? That's a lot of treasuries,
He's a whole country in himself.
right?
All right, all right. I mean, what could go wrong, right? I mean, everything's fine. Everything's awesome.
The meme with the guy, the cup of coffee. It's all
Yeah,
fine.
that's right. And all the fire behind him.
Yeah.
So yeah, let's go ahead and talk about. You said that there's certain things that maybe it's not always right. It's he's not always right, and there are reasons you gave why it may not be right. So you want to cover those now?
Yeah. So, I don't want to be the guy that's like, this time is different. But there are,
They're all
evolving
over
factors.
CBNBC. We don't need to
Yeah,
hear
right.
another person. All right, go ahead.
There are evolving factors of how markets work and change over time that affect, how this indicator reads, right? So globalization, that within the US stock market, there are a bunch of companies listed that are not US companies. So it's very hard to, compare all the US listed stocks and then to only take the GDP of the US and divide it by that number, right? Because you think about all the Chinese stocks that are in the US stock market and you only take US GDP, it kind of skews that number to be maybe a bit more extreme than it normally would be, right? There
Mhm.
are other things like the intangible assets that tech have, right? So they're trading at, tech has always kind of traded at excessive forward multiples for what may come from their future IP, right? So you think of Nvidia, it's not trading at its current valuation, it's trading at its valuation when they sell their Blackwell chip to Amazon to put in all of their cloud computing. So there, and if you look at how tech was valued in, I mean, the 2000 was pretty bad, but in '08, the forward multiple valuations were probably not as big, and tech didn't make up, the entirety of the Mag 7. So it's a bit different to think about then. And then as well as with bond yields being at such a low rate, it's when you have to think about investing, people, the risk reward ratio of yields versus being in stocks are significantly skewed towards stocks, although that might be shifting again if they actually raise rates instead of continuing to lower them, although they're pausing right
Right, right. And you said that basically the way to protect yourself is like what we would say any other time. You would also use these four things you mentioned, which is diversify your portfolio. Don't have all your very expensive eggs in one basket. You're
now.
to hedge your bets, to keep cash on hand like Buffett's doing, and to just basically listen to us. No, just listen to stay informed, know what's going on, and do your due diligence. Don't just take everything you hear as absolute truth, because a lot of times those things have narratives attached. I didn't say all the time. You should be proud of me. I should. I'm making progress here.
He's learning, he's
That's
changing.
right. That's right. So, or I just got paid off with some flash drive. Oh, never mind. Just kidding. So
A Bitcoin.
the last question is, what are we doing? Are we actually gonna hit this crash that we've been predicting, or at least I have for, which I predicted for June, but is there gonna be a crash?
Darren, I'm kind of like you, or at least I used to be more like you, where, I called the last 8 of 0 recessions.
Mm.
So
Yep.
I am a bit more um, bullish than I used to be overall because,
Mm,
bears only make money once and bulls make the money the rest of the time. That
that's
being
true.
said,
Mhm.
I personally am thinking about positioning myself to just have a little extra cash on the
Right.
sideline because
Right.
as much as you'll hate it, all the research at Goldman shows time in market is the most important thing versus timing the market. That being said, if you can have a little cash on hand, sure up some of the returns you've had over the last few years, which have been very generous to most people. Having a little cash on hand for if things do correct, even just a little bit, is probably not a bad idea.
Gotcha. Yeah, I agree. Especially like with the real estate bubble that's out there. I mean, the little mini bubble that's
Mhm.
within the big bubble. Although I don't think it's mini. I think it's a huge part of that big bubble. Because then you can, just like in 2008, you can make a lot of money in real estate once that happens. And now we've thrown in commercial real estate on top of that. So it is a good time to have cash on hand. And the guy, the main man, the main honcho, the big bro, uh, Warren Buffett obviously has kind of pretty much told us, get ready for something, just like he's done.
Mhm.
He's gotten ready for something. He's taken his money out of certain things that people are like, wow, he took his money out of Apple, or wow, he's done this or that. Now what's he doing? He's just kind of looks like he's waiting
See,
back,
even
sitting.
Buffett knew Apple AI sucked. And that man
Yeah, I'm
doesn't even
sure.
have a phone, probably.
Yeah, I'm sure Buffett knows everything that was discussed at the WEF in Davos, and when they all these corporate leaders and world leaders all get together, basically to plan our lives for the next year. But that's not scary at all. All right, we're gonna we're gonna cut it off here. I appreciate you bringing this up. Maybe some people learned what the Buffett indicator is, because that's important. You've brought like lipstick indicator. There's different things you've brought. See, I remember that are indicators that investment houses use and or plan what their actions are going to be. But one of the best all time, maybe the goat, Warren Buffett, when he does stuff, people pay attention. All right. Good
Mhm.
to have you here. Go take care of that cat. Make sure you feed it, please. And I think I don't know what time it is there, but if I've heard less and less of those roosters, so it must be past time to when they make their noise. So
I know, it's almost 8 o'clock. If you're not up
there you
then,
go.
it's just game
There you
over.
go. All right. We'll see you next week, Daniel.
Alright, see you then, Darren.